100 each. So you see here, cash received 70 million. So 100 million shares they have repurchased 6 million. One share value is 16.67, and they have sold 3 million. Answer is going to be 500,000, right? And 200,000 is going to be the premium, like I told you. All right, 3 million they have sold for 70 million. The cost of those 3 million gonna be 50 million, and they have sold it for 70 million, which means 20 million is a profit, sorry, a premium. So we call this paid in capital, but on treasury stock. Guys, you understand the transaction here?
Yes.
Good. Now sometimes, rather I should say that most of the times stocks are issued for employee compensation as well. So like we told you that company can buy back from the market or company can issue new shares to the employees, especially for CEOs when they are given the task, okay, if you increase the profitability or restructure the company, we will give you 5% shares. Now there are two ways. Either you buy 5% shares from the market or either you issue new shares. So when you issue the new shares against employee compensation, so your uh, entry gonna be employee expenses, sorry, employee compensation expenses to common stock to paid in capital. We don't have its numbers here. This is just for assumption. Numbers are assumed, right? If company has no par value, then there is no paid in capital. But normally company do have the par value. So par value multi and it's paid in capital. So remember, shares can also be issued in response to employee compensation. So like we did in our previous example, shares can be issued for assets, share can be issued for any services, share can be also issued for employee compensation. Entry is the same. If this is service, then we call this legal expenses or service expenses. If it is again for building, then it is the building common stock to paid in capital. All right. I think we already talked about that premium. So it's restarted. Okay, so I think we concluded. Wait a second. No, the other part is called. Can you see a stockholder equity account for retained earning and dividend and split?
Yes.
Okay, so that's the last part. So we know that shareholder equity is equal to retained earning and common stock. In common stock, we talked about the issuance of common stock at par and no par. We talked about the additional paid in capital. We talked about the treasury stock, the treatment of top treasury stock. We talked about the issuance of common stock in three ways. One is against asset, against any services, and against employee compensation. All right. Now let's talk about the other part of common stock shareholder equity, which is shareholder equity, which is retained earning. So we are not going to spend more time on understanding the retained earning because we talked a lot about retained earning. So retained earning is basically equal to net income minus dividend is equal to your retained earning. But if you have any loss, then you also decrease the loss. So remember, if you have a loss, then your accumulated retained earning gonna decrease. If you have income, your retained earning gonna be increased. All right. If you pay dividend, your retained earning is decreased. If you pay low dividend, your retained earning gonna be increased. Or if you pay no dividend, dividend gonna be then retained earning gonna be increased. So your retained earning gonna be decreased or increased with the dividend, losses, and income. So net income increases the dividend, net loss decreases the retained earning, net income increases the retained earning, loss decreases the retained earning, and dividend decreases the hold on, again my PPT is stuck. Okay. Okay. Now the dividend also decreases the retained earning. All right. So how dividends are going to be? What are the dividends and how dividends are going to be? How dividend are going to be distributed? Dividend takes three forms. Dividend can be in the form of cash, dividend in the form of stock, and dividend can also in the form of non-cash. For example, your company can give you some inventory. Company can give you some, uh, you know, free air tickets or free, recreational activities, movie tickets, and this kind of stuff as well. So how we are going to treat the cash dividend? So company must have both. When company issued the cash dividend, company must have its retained earning and enough cash to pay the dividend. All right. Plus, the amount of dividend must be through board of directors in annual general meeting because the amount of dividend must be declared after annual general meeting. So in general, company do not promise to pay the dividend. Why? Because dividend can be reinvested in the business in the form of retained earnings, right? And company can expand. So when company expands, the share price increases. But if company decided to pay the dividend, so remember, the retained earning decreases. When retained earning decreases, honor equity decreases. When honor equity decreases, on the other side, there is assets. Asset decreases because dividend is backed by cash. Cash decrease, asset decrease, retain earning decrease mean equity decrease. All right. So when company decides to pay dividend, there are declaration date. So on annual general meeting, the company decide, okay, we will pay the dividend on next Friday, 25 of December, for example. Right? So this declaration date, whenever company announces the dividend date, the amount of dividend is less from the retained earnings because that reserve is going to be paid in dividend payments. And then there is a date of record which is 25th of December. You record the transaction and then you pay the dividend to their accounts. So why we have three dates here? Because previously when the banking channel and all those stuff, telecommunication, services were not there in banking services, then company first declared the dividend, made the entry, and there's a payment date so that so there is no rush to the company's head offices. Everyone is carrying the shares and demanding the money. But now it is just one click of keyboard button and it's automatically paid to the shareholder account. Right? Now, what would be the entry on declaration date? So remember, let's understand it through the illustration. So when company announces the dividend declaration date on June 19, the board of directors declared 50,000 cash dividend. So did they pay that? No, they declared. When they declared, so they declared through retained earnings, because net income will go to retained earning, closing entries go to retained earning, and from retained earning you pay back some amount as dividend. So retained earnings decreases, equity decrease, debit. Liability increase, credit. So entry gonna be retained earning to dividend payable. So when you pay the dividend, so liability decrease, debit, cash decrease, credit. Dividend payable to cash. Alright? Guys, you understand?
Yes.
Yes.
Okay, good. So we know that the retained earning account is going to be normal balance is credit, and it increased by the net income, it decreased by the retained earning. We can also extrapolate to find out the balance. Even if we are not given the dividends, we are given ending balance here, we can find out the dividend by balancing method, by plug-in figure to balance this account. We can also find out the net income. If we are not given the net income, we are given dividend, opening balance and ending balance, we can find out the dividend. So what is the formula? So retain earning closing will be equal to, this balance will be equal to retain earning beginning, this balance, plus net income, this balance, minus dividend, this balance. So through this equation or through this P account, we can find out the closing if we are given these three. We can find out net income if we are given other three. Alright, we can just rearrange this equation to find out the fourth variable if we are given the three. Alright, now generalize the entry here. We have common stock, we have paid in capital, we have retained earning, we have treasury stock, we have paid in capital from treasury stock, which is the premium on the treasury stock. So generalize the transaction to record the declaration and payment of cash dividend 32 million. When